Hey, welcome to a deep dive all about Doms Industries. You sent over a bunch of stuff about their Q2 results for fiscal year 2025.
Right.
The press release, financials, the investor presentation,
Right.
even some really specific questions.
Yeah,
It seems like you really want to know where Doms is headed.
absolutely.
And honestly, their recent performance does make them a pretty fascinating company to take a look at.
Totally.
So let's jump right into this press release.
Okay.
The one announcing the board's approval of those Q2 financials, dated November 9th, 2024. But here's the thing that really caught my eye.
What's that?
The meeting itself was super short,
Really?
only 40 minutes, from 5:00 p.m. to 5:40 p.m. That just seems really quick for such a big decision.
Yeah, that is interesting.
What do you think? Is there anything to that?
Well, it's tough to say for sure,
Right.
but it is possible that the short meeting means most of the decisions were already made beforehand, maybe during some earlier discussions or committee reviews.
That makes sense.
But of course, we really need to look at the financials themselves
Yeah.
to get a clearer picture of what's actually happening.
Okay, so let's do that. Let's get down to the numbers.
Sounds good.
And wow, these reports show some impressive results.
We do.
Revenue is up almost 20% year over year
Wow.
for Q2, which is huge.
It is. That's a big jump.
And especially when you compare it to the first half of the fiscal year,
Right.
where growth was more like 18.5%.
A little slower.
Right. So it seems like they've really gained some momentum in Q2.
Yeah, they have.
And here's another interesting thing.
Okay.
The revenue for the first half of FY25, it's already over 75% of their total revenue from FY24.
Wow.
I mean, what does that even mean for their full year performance?
That's a great question.
Are we looking at a record-breaking year for Doms?
Well, it's definitely possible. That kind of growth in the first half, it definitely sets them up for a strong finish.
For sure.
And it also kind of suggests that their strategies are working. And we also see that their gross profit margin is up a bit too.
So they're keeping costs in check.
Seems like it.
You mentioned strategies.
I did.
And you also said you wanted to understand Doms' growth drivers.
Yes.
And I think this next part might be a good place to start.
Okay.
The investor presentation you sent. It mentions that Doms received an award
Oh, right.
for being the, quote, largest disruptor in the Indian stationery market.
Interesting.
So clearly, they're doing something right.
Yeah, they are.
What do you think gave them this edge?
Well, the presentation actually highlights a few things. For example, they've launched some pretty innovative new products, including a premium line of art supplies.
Interesting.
And they've also been doing a lot of marketing with influencers. It seems like these things are working together to attract new customers and solidify their market position.
So they're not just sticking with the same old products.
Nope.
They're actively expanding their offerings and reaching new audiences.
Exactly.
They're not afraid to be bold.
That's for sure.
And speaking of bold, their investor presentation states their goal
What's that?
to become, quote, one of the world's leading companies in their sector. Do you think that's even realistic
That's a great question.
based on what we're seeing in the financials?
Well, it's definitely a bold claim.
It is.
Their revenue growth in India is impressive, no doubt. But it seems like that's the main driver right now.
Okay.
Their export numbers, which we can see in the presentation, are still pretty small.
So they might be dominating the Indian market,
It seems that way.
but to become a global leader, that might take a different approach.
It might.
You specifically asked about Doms' approach to cost management.
I did. It's important.
And it's a great question,
You're right.
especially with how fast they're growing.
Right.
This section of the report might have some answers.
Okay.
Their EBITDA margin, for example, gives us some insight. For Q2, it's at 18.8%, which is up from 17.1% last year.
Okay.
So it seems like they're doing a pretty good job of controlling costs
Yeah.
relative to their revenue. But we also need to consider their recent acquisition of Unicorn Healthcare,
Right.
which takes them into the hygiene product market.
That's true.
That adds a lot of new variables.
Absolutely, it does.
Unicorn adds a ton of potential,
Yeah.
but also a lot of integration challenges
That's true.
that could impact their costs down the line
Definitely something to keep an eye on.
as we look closer at their financials.
Definitely. And speaking of Uniclin,
Yeah.
you had some questions about how that's going, how it might impact their financials,
Right.
especially whether they're focusing on paying down debt or just going for more growth.
That is a really good question.
It is.
And their cash flow statement might have some answers.
It might.
Their cash flow from operations is still really strong,
Yeah.
but there's also a big increase in accounts receivable.
Interesting.
So their Making sales but not getting the cash right away.
Exactly.
What do you think is causing that?
A few possibilities. Maybe they're giving longer payment terms to get bigger deals, especially with Uniclin and all their customers.
Okay, so trying to grow quickly.
Right.
But could it also be that they're having trouble collecting payments?
It could be.
Is that a red flag?
It's definitely something to keep an eye on. If those receivables keep growing, it could hurt their cash flow.
Even if the core business is doing well.
Exactly.
This shows how important cash flow management is,
It is.
especially when a company's growing fast and doing acquisitions.
Absolutely.
But cash flow is just one piece of the puzzle.
It is.
You were also curious about Doms' overall debt
Yeah.
and how it might be affecting their decisions.
That's an important point.
You specifically asked about their debt-to-equity ratio.
Right. That tells us about their leverage.
And the financials show it's gone up a bit.
Probably because of the Uniclin acquisition.
Makes sense.
It's not super high yet,
Yeah.
but investors will definitely want to watch it.
So they're taking on more debt for growth,
They are.
but they need to be careful. It doesn't become a problem.
It's a balancing act for sure.
It is.
It'll be interesting to see what they do next. Will they try to pay down debt or keep going for growth? We'll see what their future reports tell us.
Okay, so we've talked about their revenue growth, their strategy, and the Uniclin acquisition. But what about the bigger picture?
Good point.
How does Doms compare to its competitors? What are their strengths and weaknesses?
Those are important questions. Unfortunately, the documents you sent don't really cover that.
Okay.
To see how Doms stacks up, you'd need to look into their rivals, their market share, and their strengths and weaknesses.
You're right. We're focused on Doms specifically. But understanding the competition is always important.
It is, for sure.
It gives you context.
Exactly.
It helps you evaluate their decisions.
Absolutely.
Knowing your competition, it's essential for any business.
It is.
It helps you find opportunities, see potential threats, and make better decisions about products, marketing, everything.
I completely agree.
And speaking of strategy, we've talked about their success in India and their global ambitions. The investor presentation mentions expanding into new markets,
Oh, right.
like Southeast Asia and the Middle East. They're setting up distribution networks there
Okay.
and going to international trade fairs.
To showcase their products.
What do you think of that approach?
Seem like a good start. Building that awareness and those channels takes time.
It does.
Going to those fairs shows they're serious about global growth.
So they're laying the groundwork.
Yeah.
But going international is never easy.
It's not.
What challenges do you see them facing?
Well, they'll have to adapt their products and marketing to fit local preferences and cultures.
Defense.
And they'll also face competition from companies already there.
Oh, yeah, of course. And we can't forget about the overall economy.
Right.
We talked about inflation briefly, but there are other things too, right?
Oh, yeah, definitely. Currency fluctuations can be a big deal. They can affect the cost of materials and profits from exports.
So if the Indian rupee gets stronger, it could make their products more expensive in other countries.
Exactly.
So they need to be ready for those economic ups and downs.
For sure.
What about regulations?
Another good point.
Could those be a problem?
Well, the hygiene product industry. It has a lot of regulations about product safety and labeling.
Oh, right.
If those regulations change, DOMs might have to change how they make things or spend more to comply.
So they'll need to stay on top of that.
They will.
It's a good reminder that businesses aren't in a bubble.
Nope.
They're affected by so many things,
They are.
both internally and externally.
Exactly.
And being able to adapt to those things, that's what makes a company successful.
I agree.
Okay, we've covered a lot about Doms Industries.
We have.
Their financials, their strategy, the competition,
Yeah.
and all the external factors that could affect them.
Yeah.
But before we wrap up, I want to talk about one more thing,
Okay.
their communication style
Interesting.
and the messages they're sending to investors. Their investor presentation, the tone was really interesting.
Oh, yeah.
They're super confident,
They are.
almost boastful. They talk about their Disruptor Award, their ambition for global leadership,
Right.
their innovative products. Do you think it's justified?
That's a good question.
Or could they be a little overconfident?
Well, a healthy amount of confidence can be a good thing.
Right.
It can inspire investors
Mm.
and employees. It can show strong leadership
Yeah.
and a clear vision.
But there's a line between confidence
Yeah,
and hubris.
definitely.
And it makes me think back to that short board meeting,
Uh-huh.
the one we talked about earlier.
Mm-hmm.
Were they just that sure about having a great quarter, or was it something else? Maybe I'm overthinking it.
It's possible.
But it does make you wonder.
It does.
It's always good to be a little skeptical.
I agree.
We can't make judgments based on just a little information.
Right.
But it shows how important it is to look at the qualitative stuff, too.
Yes.
Like leadership and company culture.
Yes.
Not just the number.
Exactly.
Okay, so we've reached the end of our deep dive into Doms. What are the key takeaways for our listener?
Well, Doms is definitely a company on the move.
They are.
Strong revenue growth. Big expansion plans. Willing to shake things up.
Makes them a really interesting company to follow.
For sure.
But they do have some challenges.
Like we discussed.
What should investors be watching closely?
Well, managing costs. Without losing their competitive edge. That'll be key.
Right, and the Uniclin integration.
Yes.
How that affects their financials.
It could be a game changer.
It could.
But it comes with risks.
It does.
And their international plans will be interesting to watch.
Absolutely.
Trying to break into those new markets.
It's a company with huge potential. But the future is always uncertain.
That's what makes it exciting.
It does.
Keeps things interesting for investors.
So to our listener, keep an eye on their quarterly reports. Stay up to date on industry news. Watch for any announcements they make. See how their story develops, how they handle the challenges, and if they can reach their goals.
It's a journey.
It is.
And remember, knowledge is power.
Yes.
The more you know about a company, the better decisions you can make.
Couldn't have said it better myself.
Mm-hmm.
It's been great diving into Doms with you.
Likewise.
We love exploring new topics, so keep those requests coming. Until next time, happy investing.